How GME and meme stocks influence this market. Stay tuned. You really don't want to miss this one. Hey guys, in today's video, we're going to be discussing how GME and meme stocks have influenced this market to this day, and why I believe that the market is ready to start rotating out, okay? And I think we're gonna see a rotation into smaller and mid-cap companies. I think we're gonna go back a little bit into how a few months ago we were in those top plays where we were making really good money on Webull, on Skills, on different kinds of companies that to this day have been really beat down, okay? And I'm going to tell you why I think this and how GME and meme stocks influence this whole thing. The whole Wall Street bet thing, it was all influence, and I think that was laid out purposely by large institutions to get us, the retail investors, out of this market. Okay? So I'm going to discuss that topic. I'm not going to spend too much time, but I'm going to get straight to the point on this. So I follow NRD Rage on Reddit, and that's one of the few people that I follow on there, but I really consider his information really important, and I think it's very useful. And this is what he stated, okay, today. He says, we are starting to see two things. One, margin deleveraging, and a rotation away from 10 stocks, artificially making the SPY go up and making it look like the whole market is going up, which, with cash getting ready to pump into small and mid-cap stocks that have been getting crushed the last month. Margin deleveraging. I'm gonna paint a picture for you guys, and I want you guys to follow along, okay? Because I think this is very important, what I'm about to touch on here. I'm gonna show you this graph here, and as you can see, the red is margin debt, the blue is S&P 500. As you can see here, at the beginning of 2021, right around January, we had an increase of margin debt skyrocket here, and skyrocket to one of the highest points in history, guys, okay? Right around that time, right around that same time, is when the whole GME meme stocks fiasco happened. And if you guys remember, I made videos back then warning everybody pretty much that we cannot be messing around with the big dogs because we are playing on their field. Never knew what the results were going to be, but kind of had it in the back of my mind, thinking ahead and saying, wow, let's see what's going to happen. So I started doing a little bit more research on this, and I seen this margin debt go skyrocket, right? And then I looked back and I said to myself, let me look at how much money Melvin Capital and these large institutions lost. And it says here, how much money did Melvin Capital lose in GameStop? Melvin Capital, another hedge fund that has sustained significant losses in this month, ended January with a roughly 45% loss. A person familiar with the fund said it managed about 3.5 billion at the start of the year. These guys lost a tremendous amount of money during this time. Not only did Melvin Capital lose, but there was other hedge funds and big institutions that lost a lot of money. During that time, we had a lot of people, a lot of retail investors, okay? Because it was kind of like the retail investor going up against the large institutions. That's what it was. At the time, it seemed like the retail investors had won. Looking back 3 months later, I think it's the complete opposite. I think large institutions really picked the retail investors apart. And I think it started and it ended, and it's soon to end, I think, because I think we're going to bounce back now. Soon to end. But I think that large institutions really focused on the retail investors within the last 3 months to get a lot of retail investors out of the game. They didn't want them. They don't want them because they don't want to go through issues like GME, like the whole Nokia, like the whole BlackBerry, that whole situation where they were losing billions of dollars just because people on Wall Street Bets, people on Reddit, they were getting together and they were pushing these stocks up, okay? I'm going to show you something else here. I'm going to show you companies that have been destroyed right around the end of January to now. And I'm going to go look at 3-month charts on each of these companies, okay? And we're going to start off with Webull. I'm picking companies that a lot of retail investors had money in. And at the time, it seemed like a great investment because all you did see was the price going up. Now you get to see it, and you're on 3 months later and you're seeing the other side. So currently, Webull trading for $19. I'm going to go to the 3-month chart. Right around the same time when the whole GME thing happened, when margin debt was all the way up here, we go from 52 to currently trading $19, okay? That's like a 60% drop. Large institutions shaking the trees, trying to get retail investors out. Guess what they're gonna do after? After they're done shaking the trees, getting all these people scared, guess what? Today I had a friend of mine tell me, you know what? I'm thinking of taking my money out of the stock exchange and putting it in cryptocurrency. That way I don't have to worry about it. That's what he said. So it's getting to the point where for 3 months, the market has been dropping for all the retail investors that put money into meme stocks and into all these high growth stocks, okay? So we go from a high of 52 all the way to 19. That's a 3-month chart. Let's go to Skills here. Skills, 3-month chart. Let's go. Right around the same time, guys. Right around the same time. February 5th, $43 high. And guess what, guys? Wow, what a coincidence. It's at $13.85. Skills reported pretty damn good earnings. Okay? They're in a high growth sector. Yet they're down basically almost back to their SPAC price. Okay. Well, let's try another one. Let's try Palantir. Another meme stock. Another stock that is followed huge by retail investors. Palantir Technologies. We're going to go on a 3-month chart. Right around the same time, guys. January 27th. $39. And where is it at now? Wow. $21. Okay. I could keep going on and on and on. And let me do some of these smaller SNDL. Let me look at their chart. SNDL, Sundial Growers, okay? What a coincidence. Let me see here. February 10th, $2.95. And where are they at now? Wow. They're at $0.99, almost $1. Wow, guys. Well, let me try one last one. Because this one really caught me. So we got 3 months, right around the same time, February 10th, right around the end of January, beginning of February, high of $63. And guess what, guys? It's at $17 right now. Does that tell you something? Because Tilray is one of the biggest marijuana companies, just got APHA, yet their stock has dropped over 60% as well. So to me, it doesn't make sense. This continuous drop for 3 months does not make sense. Guys, this is me connecting the dots on this channel. We say on this channel to connect the dots and think outside the box. Hold on to your stocks. Don't get rid of them because they're right around the corner, guys. They're right around the corners. Buy more. Awesome time to buy more right now. And hold on to your stocks. Don't let these big institutions knock you out, get you discouraged. Stay in, stay tuned. Remember, if you're not following us on Twitter, make sure you follow us at InvestingOG. And also, if you found any of this information informative, please like and subscribe. Also, hit the notification bell so you can get notifications anytime we release a video. With that, guys, I'm going to let you guys go. I hope you have a great day, and I'll see you on the next one.